Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, New York coffee. The market had since late January been pressing down, making lows 2 weeks ago not seen since November 2024. In the big picture, I originally put this down to the September to October 2025 bearish shift pitchfork in showing the way lower, but it was helped by the late December last year to January this year very lopsided head and shoulders top. The subsequent move lower punched down to the 50% Fibonacci line of the January 23 to February 25 move at 286.10. However, this halt was only temporary and prices pushed further down to the July 25 lows based around the June 2011 high at 276 3/4, where we started to stabilize. The patterns these actions left behind with us was a descending scallop pattern formed over early February. By mid-February, prices broke down through the ski jump section and gave us a primary target X in the 263 zone and a secondary much harder to reach target X1 down in the 219.5 zone. However, subsequent action has countered these moves lower, specifically the 50% Fibonacci line of the January 23 to February 25 move at 286.10 eroded the decline, such that after this commentary I would feel obliged to retire both targets. I'd also drawn 2 weeks ago a small but effective bright red January based bearish Andrews pitchfork, with the market mainly utilizing the bright red lower tine, which is currently at 262.45, and today is punched up over the bright red middle tine, upper tine as well. Upper tine's currently at around, here we go, we're around about 269.30. I had hoped this would continue to show the bearish angle of attack, but that was not to be. And I will downgrade the pitchfork next time, as prices have recovered up through the top of the bright red pitchfork and up to test the broken lower tine, which is currently 298.65 of that old September to October 2025 bearish shift pitchfork, and even possibly have its sights on the 50% Fibonacci line of the May 24 to February 25 move at 310.80. Though I'm not sure if it will manage it, as back in early February the market only managed to pierce but not close over the next congestion on top, which is the 301.55 to 303.40 area. There is something else I'd like once again to look at here, and for this I'm indebted to Ray Bradbury for asking me about New York coffee 46 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025. It was a multi-year 2012 to 2024 very large, really large, reverse head and shoulders bottom, a bright red neckline on my chart, which is currently at 278.10. Please remember that level. Break higher over this neckline breached its primary target on the upside and just about reached its harder to achieve secondary target. Then the market turned lower, significantly lower in February 25, but the fall held in July and again in August last year, with the market forming a small base right on top of the bright red neckline. It was a horn bottom if you will. Then in August 2025, with its monthly key reversal up, the market raced all the way back upwards, with an extension higher in early September 2025, though not reaching quite as high as we saw back in February last year, before dropping once again, and finally last month reaching the bright red neckline once more. In all these actions, the market has formed what looks like a mother of all long-term double top patterns between late 2024 to date. So where now? Well, consecutive closes below this bright red neckline, assuming no false breaks, of course, and that's still going on, and we would have such a double top pattern with all the implications such a move lower might have. Please watch, just remember these patterns here on this monthly chart are longer term, in some cases very long term patterns, and I cover them more fully in my long term coffee technical analysis video published in January. In the meantime, please keep that bright red, slightly breached but not broken yet neckline, currently 278.10. Please keep it in your mind. London coffee. 39 weeks ago I said of the bearish pressure on this market, and I quote, now have the overhang of the market from roughly 5,300 up to this year's high at 58.49, sitting above, end of quote. This overhang of bearish pressure and ammunition is important, as it started back then to press down, magnifying the breaks lower. The main overhead resistance since then, the dark blue February 25 2-date downtrend, currently at 41.24, had enough of an impact with me that I drew a parallel bright red bear channel. It's currently 33.39 to 41.70. Back in September last year, we had some previously significant resistances that had turned into supports, notably the trio of interesting 50% Fibonacci lines. The first, the November 21 to February 25 move at 38.08. Second, the May 21 to February 25 move at 36.49, which held up the market in late December last year. And crucially, the third, the March 22 February 25 move at 34.81. The first two eventually gave way, becoming for a while resistances. The one at 38.08, well, it still is, but the 50% Fibonacci line at 36.49 is once again support. The third down at 34.81 had been threatened with testing throughout most of February, but this passed. However, with all these earlier moves lower, what now? Well, I said 2 weeks ago, and I quote, we might take a leaf from New York Coffee's book and look at the last 3 weeks' actions as a possible descending small scallop pattern, end of quote. This seemed a likely case, and I went as far last week as laying out a primary target X down in the 34.15 zone, with a secondary much harder to reach target X1 down in the 30.04 zone. I did at the time, and I quote, we'll now see over the coming weeks if this vicarious analysis from New York Coffee works here, end of quote. Last week I had my doubts about that, and today I'm again not so sure, though I'll reserve my judgment till I see how the market reacts to the 50% Fibonacci line at 38.08 and the close by green short medium moving average, currently 38.45. Finally, I drew last week something I was thinking about 2 weeks ago, and that is an October 25 to late January 26 bright green bearish Andrews pitchfork. The market has been testing the overhead bright green upper tie, which is currently at 37.90, and I watch the results with great interest. I say for a second week that I have no qualms whatsoever about morphing the bearish Andrews pitchfork into a shallower bearish shift pitchfork for the same move if the action requires it. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.